I'm Christy Duffy for Smart Trend News. Intel posted its earnings on Tuesday. Intel earnings added evidence that the economy is improving as more large corporations bought computers with Intel chips. INTC is trading up over 3% on Wednesday, a day after the report was released. With me to discuss the numbers and what's next for the semiconductors company is Jefferies & Company Technologies and Semiconductor Analyst Adam Benjamin. Adam, thank you so much for joining me today.
Well, thanks for having me.
Adam, Intel reported $10.8 billion in revenue, net income of $2.9 billion, and an EPS of 51 cents. What were your estimates for the second quarter?
We were expecting about $10.4 billion, which is a little bit higher than the street, which is about 10.2, 10.3, as well as we were expecting 43 cents, which is where street was as well. Obviously, they came in significantly higher for that number as well as for the September guidance.
All right, and according to your report on the entire semiconductor sector, you believe all semi stocks are ready to rally. And now Intel, a bellwether stock, is really setting a bright tone for the sector. The last time Intel income topped $2.5 billion was during the dot-com heyday. Is this a sign of economic recovery, ruling out the possibility of a double dip?
Well, obviously, you got to be a little careful before you just declare Intel basically setting the economy here. But it's hard to say that they don't see or a good proxy across a lot of global geographies that would suggest that things aren't nearly as bad as some people had been suggesting and where valuations were. And you highlighted our preview for the quarter for all of the industry, and we were really recommending to get back involved in semis ahead of earnings, as we think they were oversold, and this whole fear that had been lingered, especially in the PC market, through basically June and July, that things are really slowing, turns out was more seasonal as opposed to systemic. So better than people were expecting.
Could this then at least confirm a positive turn for the PC market?
Definitely. I mean, it's hard to argue that things are terrible out there. There are some indications that enterprise is picking up, so that is a positive sign kind of globally on the economic front. As it relates to their guidance, that's really a seasonal consumer guidance, and so clearly there's an expectation that the consumer is going to buy PCs for the September quarter and back to school and the holiday season. So certainly, definitely not a bad sign in terms of the economy. You know, are we taking off the table the double dip? Maybe, but hard to argue that we're off to the races here too.
All right, but what about the European economic weakness? Couldn't that negatively affect its sales in the third and fourth quarter?
Well, look, this has been something that's been a big debate, and it caused a big sell-off in semiconductors as well as all of tech as you move to late April into May. What you hear across the board is companies really not seeing any impact, very small. We did some work on this in late May. We're coming back with there's some softness, but really nothing dramatic. And Intel kind of confirmed that they saw a little bit, not much, and that it's really not a big issue here. Could it affect Q3? I think at this point probably not. I mean, the floating nature of the euro and that dynamic was affecting some purchasing, but it's sort of stabilized, and based on the industry folks that we talked to, things are now improving. So I think that's sort of in the rearview mirror, hopefully.
All right, and what about inventories? Inventory levels are still at high levels, similar to its last business cycle. Could this be a warning sign there will be a slowing demand in the chip sector? Or as CEO Paul Otellini, I believe, addressed in the conference call yesterday, he said that they raised their inventory specifically to meet the surge in demand that they anticipate for their servers. What do you think of that?
Well, look, inventories are always a sort of a leading indicator of a problem in semiconductors, so I can understand people's concern. Even with our negative view on Intel, it's hard to argue that it's a significant negative here, up on a dollars basis, but on a days basis, their inventories did kind of go up to about 85 days versus normal of 70-ish. But if you look on a forward days basis, which I think is a better metric, given that they guided for 8% sequential into the September quarter top line growth, you're really looking at more in the high 70-day range. So it may be a little bit elevated, but look, they've been talking about trying to grow some inventory. They have a bunch of new products that they're trying to ramp, and those products have actually been in quite tight supply. So I'm not really worried about it, to be honest.
All right. Well, INT stock has been depressed in recent months. What's the pressure on the stock? Can you explain that?
Yeah, that's the topic of the day. I mean, clearly you're seeing estimates that have risen dramatically. If you go back to late last year when there was a lot of argument that they'd seen the peak in Q4 in terms of gross margin and revenue, and things have actually improved on both those levels in terms of cash flow too. So, but in that interim period, all they've seen is continued multiple compression. My view is, look, this is a big company focused on one end market, the PCs, and the PC market is maturing. There's some pockets of growth in terms of laptops, but desktops are declining, and there is some storage upgrade in terms of servers. But really that's what you're looking at, and I think that's why we're recommending other names within semiconductors that have greater growth potential, accessing other markets like the handsets, for example. So that's sort of why we're preferring Broadcom or Texas Instruments here.
All right, well, they are trading up about 3% currently, and the company has been beating its earnings numbers for about 5 quarters straight. So would you advise, as an investor, to invest new money now on this stock?
I think it's tough here to be getting involved in Intel at these levels. As I said, I think you're largely looking at a choppy year in semiconductors. That's what we've seen, some kind of 15 to 20% moves up and down throughout the year. We recommended buying into ahead of earnings here and expect a 20% move or so for the whole group. We think there's better ways to play it, so definitely no on Intel, but as I recommend, for larger cap investors, a Broadcom or a Texas Instruments is a lot more appealing as you think about next year and growth potential there. So
what's your rating and your price target on the stock?
Got an underperform rating on Intel. We do have a $19 price target, not significant downside from where we are. So we're not a pound the table here from a sell perspective, but we clearly think the risk reward is to the downside, and on a relative basis, like it did in 2009 when it was up about 40% and the semiconductor industry was up about 70, and a lot of semiconductor stocks were up over 100. We think it's a relative underperformer once again in 2010.
Moving into the third quarter, some of the Intel's expectations, as they said yesterday on their conference call, include numbers like the revenue of $11.6 billion, gross margin of 67%, R&D plus MG&A spending at approximately $3.2 billion for the third quarter. So what are your estimates for the third quarter, Adam?
Well, we brought our numbers up pretty close to where they guided to. Roughly at the midpoint, and we went to 55 cents in earnings. They guide just the gross margin and the top line, so we're sort of right in the midpoint there. Clearly, today there's a lot of debate as to whether those are achievable and whether things are going to slow into late July and into August, and that's why you're seeing the stock sort of under some pressure here and not performing as well as you'd think, given the significant surprise to the upside for both the quarter and guidance.
I mean, can we really expect them to beat their results that they had this quarter in the third quarter, especially since the second quarter is not?
About next quarter, I mean, we're just a couple weeks in. I think there's been a lot of uncertainty regarding demand, and I find it hard to argue that they guided aggressively here. I think most companies guide to what they think is realistic, and given the environment, I'd be hard-pressed to think they took a very big risk here. But things can change in any end market, specifically PCs, and this is a very seasonal quarter in terms of building and making predictions for the back-to-school and holiday season. So hard to tell here. You'll have to check back in another month or so, and we can see how things are progressing in terms of the build productions out of Asia and overall demand.
All right, well, what third quarter guides did you hear on the call in terms of especially products in the pipeline?
Well, in terms of their new products, they've been ramping their core i3, i5, and i7. Those are 32-nanometer parts. They also talked about Sandy Bridge. That's their next platform, which they're pulling forward. a little bit. So those are the things to be paying attention to, and obviously those new products, specifically the current products are 32 nanometer, which are driving pretty nice gross margin for them. So that's still not fully factored in as a high percentage of their mix yet, and as it improves or increases as a percentage of the mix, that could actually drive further gross margin, even though they're sort of looking at the peak here, or some are proposing that they are.
All right, and where does the company stand in the competitive tablet market?
Well, I mean, that's been one of the debates. The iPad's gotten a lot of press, and clearly they're not inside that device. But I do expect to see a lot of tablet-like device or iPad equivalents from all the PC makers late this year. You'll see some hit the market. You'll also see some at the Consumer Electronics Show in January. The bigger debate is, what's going to be the driver for someone buying those tablets as opposed to an iPad, which offers a lot of different options and ability to access your music, your videos, your books, etc. So I think that'll be up for debate as to whether those take off or not. Clearly, the two advantages of a Windows-based tablet which uses Intel is you can use Flash, which is from Adobe, as well as you can access your Word, your PowerPoint, your Excel, which you couldn't on an iPad. So that's sort of the differentiating factor. And right now, I think iPad's got a big lead, and I think it's going to probably be the Christmas hit for this year.
Okay, well, thanks so much for talking with us today, Adam. Before you go, can you just give us some insight? Advanced Micro Devices, which is Intel's biggest competitor, is due to report Thursday. Can you give us your EPS and price target for the stock and some brief insight on what we can expect from AMD?
Well, look, I think AMD is obviously very similar end market exposure as Intel, serving both laptops, desktops, and the server market. One thing to note here is you are seeing a higher exposure to the desktop market, which is a little bit slower for AMD. Our price target's $7, so some slight downside to where the price is today. Also a name we're not a huge fan of here, given the run-up and the recovery in PCs. I think their business should be fine for the quarter in similar fashion to Intel, but bear in mind they do have some more desktop exposure, which has been slower for them, and should impact a little bit of their guidance.
All right, Adam, thanks so much for taking the time to speak with us today. I'm Christy Duffy for Smart Trend News. For more earnings news, analyst insight, and market analysis, make sure you're subscribed to our YouTube channel, Trade the Trend. You can also check back to our website, tradethetrend.com, for more headlines.